Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Friday morning pre-market webcast. Okay, so jobs report, the 800-pound gorilla in the room. It's going to be in a little bit less than an hour. It's about 7:33 Eastern Time as I am taping this, and I'm going to get this out and into everybody's hands before the report comes out. The first thing I'll tell you, and for anybody that's followed me for any period of time, knows exactly what I'm about to say. Don't game jobs. Don't game the jobs report. Don't sit there with your amateur economic opinion at 8:29 in the morning and decide, well, the reaction in the direction is going to be higher, or the reaction in the direction has got to be lower. So I'm going to take a bunch of contracts and I'm going to throw it on red, or I'm going to throw it on black, and then I'm going to let these guys spin the wheel and see if I'm having a really, really good day or a really, really bad day. Don't do that. That's not trading. I don't really know what that is. Um, and the reality of the trade itself is this. If you're right, you'll probably take it off in 5 minutes because you'll just be so over the moon about the fact that you got it right. And trades like that are more about being right than they are about making money. So you'll take it and you'll exhale and you'll swear that you'll never do it again, etc. If you're wrong, then you'll hold on to it. And you'll hold and hold and hold because remember, it's not about making money, it's about being right. And you'll end up taking a big hit. So the better thing to do is what we do in the room, which is we get the number. Price reacts. We get an upside and a downside of the reaction range. Then we see what the reaction range wants to do. Does it want to make lower highs? Does it want to make higher lows? Do we break out? Do we break below? And that way you can find trades with risk and just like anything else. But assuming the reaction, there's no future in that. So don't game jobs. Now, what did we see yesterday? We've seen for 2 sessions in a row now that the bears have held the middle band on the daily chart. And we've spent the last 2 sessions, at least portions of the last 2 sessions, below the lower band on the daily chart. Now, this isn't a band ride or anything like that. I mean, we're engaged with the lower band. I'll give you that. But when the Bollinger Bandwidth comes into the day at 0.9, I'm not ready to go there for band ride. Am I ready to say that the bears have a little bit of an advantage for price expansion? Yeah. The problem with that, in 54 minutes, we have a catalyst. Catalysts tend to favor the bulls. I mean, we wouldn't be up here if they didn't. Now today may not be the case, but you got to be careful going into it. What the bulls are going to want to do is break above the daily mid band, which is coinciding with the new monthly pivot in the 67 area. They want to well, let me try that again. The mid band's up at 77. The monthly pivot is at 67. We're basically trading on the monthly pivot right now. They want to break above weekly pivot. They want to break above monthly pivot. They want to break above weekly pivot at 73. That 73 to 77 area is what's been a problem. 84 has been a problem. They haven't been able to convert that, at least on a multi-day convert to support and head higher basis. They haven't done it yet. Then they have to deal with the all-time high. If you're the bears, you want to break yesterday's low at 57.45. You want to take out that floor at 52.53. And you want to catch the red line there, the 50-day exponential moving average in the process, and you want to close today below the red line. If you can close below the red line as you head into next week, some people are going to be wondering whether or not this is the beginning of a pullback. The storm that the bears would have to weather at that point is the Sunday night into Monday morning, awesome, let's buy a dip, here I come, here we go again kind of thing. If they can withstand that, if they can survive that, then they have a chance to make some lower lows. The bands are so tight that when price expands, whether that's up or down, there's going to be some follow through related to it, just as a function of compression into expansion. So that's where we are. Don't game jobs. See what the reaction is, find a trade, and go from there. But those are the signposts on the upside and the downside that'll get you through. Everybody have a fantastic Friday. Have a fantastic Labor Day weekend. For those of you here on the Atlantic coast in the path of Hurricane Hermine, be safe. Um, Follow us over at Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. New month. Got off to a fantastic start yesterday. Just a great bunch of people in there. Come check us out. Come trade with us. I'll be back Monday morning with another webcast. Trade them well, everybody.